Uh, I had asked if there was significant background noise. I guess it's not that much, luckily, since I'm live streaming from my hostel room right now. That's good to know. It's clearly audible. I guess we have 2 more minutes before we start. I see the stream is live on YouTube as well. Can I see the YouTube comments appear in this chat as well? Okay, that's good to know. The YouTube comments will also reach me. I'm going live using the Creator platform. It's a great platform. People are extremely kind. I guess we'll start in another 1 or 2 minutes. Akshat says hi. Hi. What is my age? Mosam asks my age. I'm 20 years old. I'm going to be 21 in June. I'm going to be discussing about paths to financial freedom in this live stream today. So I think it's time to begin. So, hi guys, I'm Vedant. I'm a third year student studying electrical engineering and masters in physics at BITS Pilani Hyderabad campus. I had got interested in finance during the lockdown and I had started a YouTube channel by the name Teen Investing. Today I'm going to be discussing an extremely interesting topic that I had come across a while back. This idea kept coming back to me and I was getting more and more drawn to it. I will try to take questions actively as I speak, but I may end up addressing most of them towards the end. Before we jump to financial freedom in specific, let's have a brief discussion on freedom itself. When a person is asked what is the best phase of their life, we can all agree that the most common answers are school and college days. This is very logical and makes sense because we enjoy the maximum amount of freedom during these years. For example, we can bunk classes and start a YouTube channel. By freedom, I am referring to a very broad and encompassing meaning of freedom. For example, freedom to choose how we spend our time, pursue our hobbies, decide what we want to work on without having to worry about how much money it may fetch us. In today's day and age, one of the most significant types of freedom is financial freedom, not having to work for money and working only by choice on what interests you truly. This probably sounds like an alien and impossible scenario. However, there is a community of people who have achieved and are actively pursuing this goal by the name FIRE, which stands for Financial Independence Retire Early. I find the acronym FIRE extremely apt. This is because it is only a person with a burning sense and desire for freedom who can follow this path. This is a difficult and offbeat path, but it is definitely worth being aware of and even seriously considering. I have divided this live stream into 4 segments. First being, what exactly is financial freedom and why it is worth trying? Second, how to go about achieving this? Third, how it is a win win situation even if you fail to achieve FIRE. And lastly, how Indians in specific, I believe, have got unique advantages and can make use of them to achieve FIRE. On that note, let's begin. Financial freedom means that you have become free from the need of any more money. You now generate enough passive income to cover your living expenses. By passive income, we mean sources of income that do not require us to actively work and put in efforts. For example, rental properties, stocks, bonds, and businesses that do not require our presence. Once you don't need money for your living expenses, you have essentially become free to do work that you enjoy and find meaningful. Sounds amazing, doesn't it? And guess what? This can be achieved by salaried employees too. You don't need to be someone who's born to a millionaire with large amounts of inheritance. However, that would make life a lot easier. The most critical factor that determines how quickly a person achieves FIRE is solely dependent on what fraction or percentage of your salary you are able to save and not how much your salary itself is. This makes sense. If you have a big salary and equally large expenditures, you won't be able to save and invest enough money which would cover these big expenses. Therefore, you will need that salary and you cannot break free from it. Let me look at some questions. Did you bunk classes and start a channel? Actually, I did bunk some classes. Actually, I bunked all my classes today, and I enjoy tremendous amount of freedom here at BITS because we have a 0% attendance policy. Vivan asks, full form of FIRE again. FIRE stands for Financial Independence, Retire Early. Visual says hi. Let us now look at how one can go about planning and achieving financial freedom. As I mentioned earlier, achieving financial freedom has a lot more to do with controlling expenses than the magnitude of a person's income. So, how big your income is irrelevant compared to how much you're able to save or what fraction of it you're able to save, to be precise. Achieving FIRE is about cutting down costs to bare minimum and investing wisely. While investing, we need to select equities and index funds as our investment option. Nifty, the index in India, gives us about 13 to 14% compounded annual growth rate over a 7 to 10 year span. This allows us to beat inflation meaningfully and make timely withdrawals as well, as these are liquid assets, meaning we can sell them at any point of time and convert it to money. The same does not apply if we were suppose considering a piece of land. We cannot keep withdrawing a small fraction of it. We would have to sell the entire thing. I'm going to take an oversimplified model, a very simplistic model, which captures the essence of how a person can achieve FIRE. You are free to tweak this basic model to suit yourself. Let's assume my monthly expenses are 25,000 rupees today, which means my yearly expenses are 25,000 into 12, which is 3 lakh rupees. If I'm able to generate 3 lakh rupees every year passively, meaning without having to do work, I can say that I do not need to work for money anymore and I have achieved financial independence. I have made a big assumption that a person is going to maintain his standard of living. Also, we are yet to introduce the effect of inflation into this picture right now. As we discussed previously, Nifty has historically given us a return of 13 to 14%, while inflation in India is close to 6 to 7%. This means we are left with an inflation adjusted return. Keep in mind, we have now adjusted for inflation. We have an inflation adjusted return of about 6%. Inflation is the phenomenon of how goods and services tend to rise in price with time. So the same petrol keeps increasing in price year after year. This now brings me to the famous 4% rule in FIRE, which states that if I accumulate a total amount of which only 4% is my living expenses, we are now financially free. This is because we are withdrawing money. So every year I'm going to be withdrawing 4% money from my entire corpus that has been invested. And this corpus itself is growing at a rate of close to 5%, which means that my corpus is now going to stay constant, roughly constant, and I'm going to keep withdrawing money, which means I'm never going to run out of money anymore. The capital required turns out to be 25 times our annual expenditure. This means that a person whose annual expenses were 3 lakh rupees can retire once he has accumulated an amount equivalent to 75 lakh rupees today. This requires him to cut expenses and invest the savings month after month into the stock market in a disciplined way. I have not taken lifestyle inflation into account here, which means that a person generally, as they grow older, they indulge in more and more luxuries and their expenses tend to grow. I will now like to touch on a very crucial part. While a person may make a plan and stick to it to attain FIRE, life is obviously not so simple. There are so many more variables and other factors that play. For example, your family may not be aligned with these ideas. Therefore, a person may not reach FIRE. However, this is no reason to be sad, because I feel in trying to achieve FIRE, a person would have inculcated many good habits and escaped lots of modern day traps and saved up a lot of money, which could assist you in making a career switch, for example. Tanmay Bhatt, the famous comedian, quit a full-time job that he had in order for him to pursue AIB. While AIB could not provide instant or quick returns or rewards, he was in a position to take that risk, looking at its potential. He was able to do this because he had great savings that made it possible for him to try this. Therefore, having surplus savings and investments can give us the freedom to try alternate paths. Apart from that, people who pursue FIRE end up avoiding purchases such as a car and often use cycles and public transport instead. This is better for our health as well as the environment. People end up cooking food for themselves instead of eating out because it's cheaper and also ends up being healthier many times. I think, in a way, we escape and free ourselves from the modern day consumption trap, which makes individuals constantly feel the need to have more and more latest and more branded products. People end up learning to find joy and satisfaction from the work they do rather than depending on materialistic things constantly. So while the goal of FIRE is amazing, so if you actually reach FIRE, there's nothing like it. But there are many, many hidden treasures along this path that are worth trying. I would like to add some reasons why Indians in specific have some advantages that can help us in this journey. For example, Indians quite often take immense pride in being frugal, or in other words, kanjus. This being considered as a quality, there is a lot of acceptance. Forget acceptance, there is in fact admiration for this quality. Apart from this, living with parents is also normal and widely accepted in India, unlike in other places, which means if you live with your parents, you will be saving a lot on your living expenses by splitting them. Cooking using fresh groceries is also cheaper and healthier and common practice here. It is nothing new for Indians. And lastly, savings rate in India is already high, which means that many people have already got the habit of saving, but they do not invest it appropriately yet. Therefore, FIRE is something extremely interesting that I want to try, and through this live stream, I'm trying to convince myself to make more changes as well, to possibly give this an honest attempt. Because obviously, even I'm not sure if I'll be able to do it, but it's something worth trying. Fire is not for everybody, but everybody can learn a thing or two from it for sure. Yes, I'll take some questions now. Tarun says we have a lot of disadvantages too. Very true. Yes, we do have disadvantages too, and that is that in India we often associate a lot of things that we buy with status, and it's a very status-driven society in the sense having a big car, a big house, it gives greater societal status. Maybe that is what they were Tarun was trying to talk about. Vignesh says he makes sense to him, and even he wants to try it. That's great. How did I? Yamini asks how I got started on my investing journey. Well, I started my investing journey during lockdown. It's during the massive market correction that happened, and there was so much news and all that suddenly caught my eye, and I also stumbled across compounding. Well, for people, compounding is like the core engine that drives wealth generation and many other returns as well. So compounding works in our favor only when we give it time. Given enough time, compounding shows exponential growth, and therefore it makes sense most for youngsters to start investing. It is the best time to invest, and they are the people who can reap the most benefits. And after researching more about personal finance and investing through random YouTube videos and books and articles, I started investing, and that is pretty much how I've gone about it. Uh, do you know anything? Rahul asks, do you know anything about investing in startups or businesses? Honestly, I do not know much about investing in startups, probably referring to venture capital and such domains. I do not have, I haven't looked on these yet. Hemant asks, investing in sense equity or cryptos or NFTs? Well, investing, I'd mentioned actually this earlier. By investing, we are talking only about equity investments, and that too into index funds, because these are extremely well understood and tested. They've performed over a long span of time, and we know they will perform in a similar way in the future as well. NFTs and cryptos are extremely volatile and risky asset classes in which it makes no sense for us to invest our life savings. It may be sensible to put 2 or 3% of our portfolio maybe to random, just so we can get a big return on that, possibly risk a small amount. But by investing, we don't mean NFTs and cryptos. Tarun Tarun says he likes how I'm explaining. Thanks a lot. Do you know about stock market investing? Yes, I think the next live stream would be about stock market investing. We can touch upon what index funds are to start with. So index funds are basically, in a sense, they are these large pools of money. So an index is basic. Nifty is basically the index of our stock market in India. So it's a basket of 50 companies across 13 sectors. And through this, what we can do is we can invest small amounts and diversify it across various companies. To buy each and every stock of these companies in Nifty would cost us like lakhs of rupees, and it wouldn't be feasible. But if enough people come together, pool in money, then it can be distributed and everyone can benefit from it. It's like the chocolate example, the classic example to explain this. Suppose there are 10 different varieties of chocolates and you have got 10 rupees. You want a piece of every single chocolate, but you are not capable of buying all the chocolates. So what you do is you find 10, you find 9 other people. So collectively you become 10 people with each 10 rupees. You buy the 10 chocolates and divide it appropriately amongst yourself. So this way you're able to get benefits of diversification even with smaller amount of money. Tarun says, I have a solid 70% portfolio of cryptocurrencies only. Well, honestly, that is personal choice, and we don't know how much money he's managing. So, yeah. R- Rahul says, do you know about SIPs or chit funds? Well, SIP is basically a method of investing. So, SIP stands for Systematic Investment Plan. So what happens in this is every single month we invest a fixed amount on a fixed date. This is advantageous because salary is credited to accounts monthly. So therefore you can easily invest according to when your salary gets credited. Apart from that, the stock market we know does not give this constant 13-14% compounding. It goes high low. It has over a long span of time we know how it we know the trend over 7 to 10 years. But in short spans of time of maybe 2 years or 1 year, there'll be a lot of volatility. The way we can fight this volatility is by purchasing across every single point. By doing that, we get a lower average value, which will assist us in benefiting from the long term compounding. So that is the deal about SIPs. Hemant asks how to choose intraday stocks. Honestly, I do not trade by trading in the sense. Uh, I do not take short-term investments, which are like less than 2 years, 1 year, or weeks, or whatever. I only do long-term investing because that is something that makes more sense to me and I have confidence in. And it has turned out to be the thing that works out for uh, most people. For example, the richest people are also people who invest for the long term. For example, Rakesh Jhunjhunwala, the majority chunk of his wealth is actually coming from an investment he had made long back in a company called Titan. So basically, buying it at an early stage for a low price and holding on to it through a very long period of compounding, that is what has benefited a lot of people and has been tested and proved to be true. So I am going to be sticking to that. Tanya asks, is it sensible to invest money and pay off a loan and paying off a loan? I think what she's trying to say is, between paying off a loan and investing, what we should be doing, how to manage both of the things possibly. In general, by rule of thumb, we should always get rid of a loan before we start investing. We should be investing money that we can afford to lose in the short term. But that is not the case with loan money, for example. That is money we have to repay at a fixed time, and therefore it always makes sense and is the best thing to do is to first aggressively pay off this loan. And because otherwise you would be constantly losing interest. Basically you'll be paying interest on the loan, and if you don't pay it off quickly, that that loan will act like a leech on you, constantly sucking funds out of you. Hemant, please clear the confusion between mutual fund and SIP. So mutual fund, like I discussed before, is like this intermediary. Basically, it facilitates for many people to come together, put in and chip in money, and then they are capable of diversifying it across different equities. SIP, like I said earlier, is just a method of investing. It's like consistently buying so you can fight off volatility. Pranav asks how old I am. I am 20 years old. I'm going to be 21 in June this year. I know I don't look my age. Mosam asks, government should add stock market to syllabus in lower standards. Absolutely. I really think, especially at least in high school, when compound interest is taught in suppose whichever middle school or whenever it is, it definitely makes sense to add a small chapter on personal finance and investing because it is the most practical way of observing how compounding works and how it can impact our lives directly. Pranav asks, Vedant, can you explain concept of hedging? Okay, so let me do this with an example. Gold, for example, acts as a hedge against stock market. So when the stock market goes through large corrections, what happens is people take their money. The people get scared when they see large market crashes. So what happens is people pull out their money from the stock market and invest it in safer options like gold. So when the stock market is declining, our gold generally, this is not at all true every single time, but as a general trend, the value of gold tends to rise when the stock market falls. So what is happening is, if I invest little bit in gold, I am basically decreasing my risk against the stock market, because when the stock market dips, gold will try to save me essentially. Hemant says, as you mentioned about long-term investment, how to choose multi-bagger stocks. Uh, I think this is a very big topic that even I'm trying to learn right now. But for multi-bagger stocks, the basic framework that we require is to, first of all, the company needs to have a very long runway of reinvestment. So the market size needs to be large that they are trying to capture. Apart from that, they should be constantly grabbing market share, and they should be capable of consistently reinvesting and getting a certain percentage of return. I think Coffee Can Investing explains that really well. It's a very good read. Mosam says, because 60 to 70% people are learning in school in US. I don't think I understood the question. I think 60 to 70% investment people are learning in school in USA. Not, didn't understand the question clearly. Tanya asks, do you plan on helping people manage their money in the future? Uh, Absolutely. This is something that I would like to do long term. I think it's a simple problem that will soon be solved without too much effort. In the sense, financial literacy in general is on an uptrend, and people are learning uh, by watching content creators and reading and a lot of different things. I think this problem is going to be solved soon at a large scale. Mosam asks what that was continuous sentence of adding. Acha, it was a he was continuing the previous question. He is saying he government should add. Well, I think what he meant was that what he meant was that in USA the stock market penetration is about 60%, 50 to 60%. I'm not exactly sure, but something around that range. But in India right now it's only about 2%. Therefore, we have a long way to go, but stock market penetration is increasing quite rapidly in India too, and it would probably increase at a much more rapid rate if government, or like if these topics were taught in school itself. Hemant asks, can you please help us divide where to invest and what percentages? Well, where to invest and what percentages? The thing is, each person invests with different uh, frame of mind. For example, some people just want to protect what they have earned. Some people may want a lower risk and a moderate return. Some people might want a higher risk and higher return. So based on that, each person will have to kind of make a judgment on what is their risk appetite, their investment horizon, and based on those parameters, you can decide what should be your portfolio allocation for each asset class. For example, if you're investing for a very short span of time, for just 1 year, it doesn't make sense to put more money in stock market. So the question that asset allocation question Hemant asked, it is depends on person to person with their specific expectations from the money. and we cannot put a general rule for everyone. Uh, Tanya asks, can people invest in different countries? Which country is best to invest in? Absolutely. I think the platform that I use, the broker that I use, Grow, they have enabled investing in US stocks. And even apart from that, NRIs can invest in India as well. Hemant asks, my favorite stocks. Actually, I'm still I don't want to answer this question, not because uh, I don't want you to get rich or something silly like that, but because giving stock tips is extremely risky, I feel, as, and I do not want to indulge in it. For example, I give some tip, it may or may not work out. I have some kind of responsibility. I mean, that's secret, not exactly secret. I mean, there's a very high chance I may be even wrong about a particular stock, so I don't want to give you some wrong information accidentally. But in terms of industries, I will say that I'm quite bullish on the specialty chemical segment and also the financial segment like banking, and so these two sectors have been getting my attention more now lately. So if that satisfies Hemant. Mosam asks, if you look at other indices like US 30, US 500, NASDAQ 100, GER 30, AUS 200, all are having heavy value while Nifty is baby in value. So best time to invest now before foreigners start doing it. Uh, I think the best time to invest is always right now, and that never changes. So essentially, India also is going through a growth phase. It is not yet completely developed, and it is a developed kind of like a developing nation. Therefore, it has much more growth prospects than probably already developed countries. So yes, India is a great place to invest, in my opinion. What's your view about LIC housing finance, Hemantas? I haven't looked into it honestly, so I won't be able to add anything to that. Tanya asks, do you invest in sustainable companies? Example, green energy. Uh, I actually do invest in sustainable companies that are trying to produce green energy for the future because it is extremely required, and it is extremely required and yeah, it's quite obvious that we cannot keep burning fossil fuels forever. So green energy will be a transition that we can take advantage of. Index fund means ETF, right? Mosam asks. Well, they're similar, but there is a difference. Index fund acts more like a mutual fund in the sense that I pay them a certain amount, and that money gets distributed across the companies, and that money tracks the index. However, ETF acts more like a stock. It's like every time I buy and sell, I'll have to pay brokerage. But when I'm investing in index funds, I will be paying a small commission for this particular fund house for doing this work of diversifying on my behalf. So there's a small difference, but they are similar. They're very similar. How Mosam asks, how can we purchase index funds? How can we purchase index funds? There are many ways. For example, you can invest directly by going to a particular fund house. For example, there is Aditya Birla, there is UTI, there are many fund houses that give us the service of investing. They provide index funds. So they essentially take money from us and invest it across the index. So you can do it directly by going to their website, or you can do it through your broker. For example, I invest in index funds through my broker Grow. So I can just search for that. It's a similar to a mutual fund index fund is similar to a mutual fund. It's a special kind of mutual fund to be more precise. So you can invest in it through your broker. You can go in the mutual fund section and search for index funds. You'll be sure to find it there. Tirthankar asks, should we apply for Ruchi Soya FPO? As I said again, I actually haven't really looked at this part. Sorry, I haven't looked at Ruchi Soya FPO, so I haven't invested or anything, so I cannot really talk about that. Apart from that, Hemant asks return on ROI on index funds. So index funds in India have given us close to 14% compounded annual growth rate. So your money basically increases 14% every single year. So if it was 100 one year, then it goes to 114, and the next year it will be 114 plus 14% of 114. So that is, and this we are speaking over large spans of time again. Over a short span of time, it might give us a very big return or a correction or a loss. So when we talk about the compounding in stock market, it's generally over long spans of time because making short-term predictions is extremely difficult. Tirthankar is asking for different companies. I actually haven't looked into those yet, so I won't be able to answer anything about that. Uh, I guess that's it. That's more or less it from my side, and I think the questions are also more or less done. So I think it's a Hemant asks, what about Vanguard? Vanguard, I think this is in US. They help us invest in the S&P 500. Not relevant to India, I guess. Not that I'm not sure actually. If they are providing any services in India, but Vanguard is like the fund house that helps invest in the S&P 500, the index of American stock market. Not really relevant here, I think, to India. I guess that's it. It was a really fun and interactive session. Thank you everyone for tuning in, and I think I will stop soon.